Thank you very much for joining me on the Freedom Driven Landscaper podcast brought to you by the Lucrative Landscaping book. Jack, I really appreciate having you here. Would you please tell me a little bit about your experience in the industry and your business as it stands today?
Sure, Chris, and thank you for inviting me. And it's a pleasure to talk with you today. My journey is probably a little different than a lot of people in the landscaping industry, although it's also similar. Like a lot of people, my first recollection of work where I got paid was mowing yards when I was a kid, and I quickly realized that I probably wasn't well suited for that, or at least I didn't feel like I was at the time. And so I went down a different path of getting into other businesses and working for other companies. And my career took off in my 20s and into my 30s. And ultimately, I spent a very long time working for large global companies. And that taught me a lot about business. It taught me a lot about life. It gave my family and I an opportunity to travel the world, live internationally, and do a lot of different things. But in the back of my mind, all along, I kept coming back to, yeah, sometime in my career, I should experience owning my own company. And that just kept eating away at me and eating away at me. And finally, about 7 years ago, I decided, I needed to do something at that point if I was ever going to do anything. And so I left a pretty, really high paid job, a lot of benefits, a lot of responsibility. And I went out on a search to try to find either a business that I could open, a franchise that I could buy into, or a company that was existing that I could acquire. And I went through a path on all three of those areas, if you will. And I realized that for me at my age and my experience level, that buying an existing business was probably the right thing. And I hired a company to help me with that. Um, and and they helped me identify my strengths and weaknesses and what I would be well suited for. And then we went out and marketed me and my resume to a lot of different businesses in the Dallas Fort Worth area that were not necessarily being represented as being for sale. That was part of our strategy. We didn't want to go to talk to brokers and that sort of thing. We wanted to find companies that might be the owner may be willing to sell, but they weren't actively marketing the company. And I found the company that we ended up acquiring. So we acquired that business, which is a full service landscape maintenance company, a little more than 6 years ago. And since then, we've acquired one other company, which is a landscape lighting company, which was a service that we didn't offer before, but I thought it was sort of an adjacent service that would be easily marketed to our same client base. And I believed that by having a separate entity and a separate business for that, that we would be able to scale it quicker.
Yeah, right. Wow, there's a lot. I'm just thinking all these questions popping off. What about this? What about that? So, okay, first, so a lot of people are interested in selling their business. So it's neat that you start off from a position of buying one. The company that you worked with, and they were looking at your personal aptitudes for which company you should buy, is that right? Or was it more?
Yeah, sort of. What they were really trying to determine is how to market me. Because again, if you think about it from a standpoint of we're going to go talk to business owners or we're going to try to talk to business owners that may not necessarily be ready to sell their company. Um, we felt that we would need to be able to create some common ground, a comfort level, confidence level that they weren't just selling to a large private equity firm that was going to maybe do something with the company that they built that they didn't want to see happen. So a lot of business owners, especially the business owners that started their own businesses, I mean, they're very, very in tune with their company, and it's almost like a family member. They don't want to see anything happen to that family member or to the people that work in the business that helped them get to where they were. So we believe that what we were really trying to do is to find that unique business owner that may be willing to entertain the sale of their business, but was not necessarily ready or actively trying to sell it. And the primary reason for that was that a lot of business owners, especially this is my my experience, by the way, has been that when they hire a broker to help them sell their company, a lot of times the broker will either tell them what they want to hear, which is, yes, your business is worth whatever you think it is, or they may give them a number of what they think they should be able to get for the business. And a lot of times, as a buyer, I don't see the same value. And I didn't want to spend a lot of time working with people that were trying to sell something that may not be worth what, at least in my opinion, what they wanted for it. So yes, the company that I hired to help me with this really specializes on working with people that are mid-career, that have been working for a long time in large companies, probably in high level positions, that want a taste of entrepreneurialism, at the business owner level. And so really it was them helping me identify what I was looking for, helping me narrow the field of types of businesses that we would be looking for or looking at. And then they were very instrumental in helping negotiate the myriad of terms and conditions that go into. We bought a multi-million-dollar company, so it wasn't a very small business we bought. So there's a lot to goes into that. They connected us with SBA funding. They connected us with legal help, lawyers and that sort of thing to put the whole deal together. And even though we spent a lot on their assistance, it was worth every single dollar.
Yeah. Yeah, right. I can really resonate with the two of the things you said there. One, not wanting to sell the company to just anybody. When I sold my business, I didn't sell it to the highest. Well, I talked to the highest offer. He seemed okay. Googled his name, and there was a similar name that popped up with a history of a court appearance of some sort to do with burglary or something. So I emailed him and said, "Hey, our clients are going to Google your name. Do we have a really good story that this isn't you?" And I never heard from him again. So that was
Mm,
that.
mhm,
And then the second guys, they were good, but they were a bunch of drywallers. My business wasn't big like yours. They were a bunch of drywallers, and they just wanted summer work, so that was kind of eh. But then the
mm,
next one was a family business. They were he was a guy buying up businesses actually to give jobs to his family members, which was kind of neat. And I was really happy with that. The other thing that stood out to me was when you mentioned the valuation, and that I've seen a handful of times with not myself, but with other businesses where their perspective of what the business is worth turns out to be not quite what they thought it would be. And the little experience I had, I bought a cutting company at one point, and the poor guy, his office had burned down, and all of his books had gone with it, and so he couldn't prove any of his numbers. All he had was a client list, partly handwritten, if I remember. And so I think I paid a tenth of the price he was asking for just because I couldn't prove that his list was worth anything. And it basically came down to buying his pretty beaten up, equipment. When you were looking at the valuations, of course, there's the list, there's the equipment. Those are probably the obvious ones. But was there anything um, maybe that you didn't expect, or that maybe people wouldn't expect, if that you would that maybe you would speak to for people who are considering maybe selling their business, or even just considering what it might be worth to sell?
yeah. That's a great question, and I have a lot of thoughts on that, but I'll try to narrow it down to just a few. One is just over the last 6 months, I've looked at 3 or 4 other companies that have called me asking if I would be interested in buying their business. They were ready. They've run it for 20 or 25 years. We've got a great reputation in the marketplace, and and they called to say, "Hey, I'm ready to retire. Can we meet? Can we take a look at we've got an idea of what we'd like to get for the business." And 100% of the time, they come to the meeting with some information, but not enough. And my number one recommendation to anybody that is thinking about they may be considering selling their company would be that it pays huge dividends to have really good accounting practices set up, even if they are rudimentary, but that they're consistent. And the simplest way to do that is to hire a local, accounting company to help you get your books in order. And I would always recommend that you do that about 3 years before you're ready to sell, because most buyers would like to see steady progression of 3 years of financial data. Both companies that we bought ended up having almost 10 years of financial data each. So it's like, okay, I see 10 years of tax returns that closely tie in with the same profit and loss statements and balance sheets from each year. And you're like, okay, this is probably pretty legitimate information that I can trust and that I can count on. So first and foremost, if you were going to sell your company, try to have clean data and in a standard format. It doesn't have to be you know GAAP accounting or generally accepted accounting practices standards, but something on the profit and loss statement and a balance sheet for each year is very helpful. Um, Client data is also very helpful, and people, at least in our industry, that get the highest valuations for the companies normally are able to show consistent growth, even if it's a small business, it's growing 5, 10, 15% per year. They've got written agreements. A lot of people in our industry don't necessarily believe in having written agreements. So, written agreements go a long way. Being able to demonstrate that you've got a client that's got a written annual agreement and it's recurring revenue is going to cause people that are willing to buy the business to pay more money for that, because you're de-risking it at that point. For small businesses that don't have all that, I think the best approach to take when you try to sell it is to find a company that's in the same industry, that's in the same market, and then try to negotiate some sort of an earnout. And that's what I had offered to three different businesses here this year. Um, Interestingly enough, two of them decided just to close their business, and they could have earned money by just working with me or with us a little bit on the front end to try to transition those clients over, and then we would have paid them out a royalty, if you will, for a period of time. But that's the other thing that you realize when you buy lawn care and landscaping companies, especially smaller businesses. Um, a lot of times there are going to be reasons why their clients are not going to be good clients for the buyer. And the buyer is always going to be taking that into account and reducing the value of that company based on what percentage of your clients do I believe that I will be able to successfully onboard. Um, you don't want to pay for something that you're never going to earn revenue off of, or you won't earn a profit off of. But I don't know. There's, there's a lot of resources in our industry. And so the way I would look at this also is that most likely one of three things is going to happen with any business. It's either going to be sold, it's going to be handed down to a family member or, somebody, within the family or within the business, or they're simply going to go out of business. Because none of us get into business thinking that we're just going to go out of business. That's not the idea. Uh, it happens a lot, but it's not the idea. So my perspective is that if you own your own company, you should always be thinking that someday I may either want to sell or I may have to sell. And there's no time like the present to begin creating a business that's sellable, even though you may not be thinking that you're going to sell it for a decade or 2 decades or however long. But having good accounting practices, always be trying to grow your business, staying up with price increases, that sort of thing. Excuse me. But always be thinking that something may happen to you physically and you have to sell the company and you want to get the maximum value for it at that time.
Yeah, I really like what you said about I like that point that it's, you should kind of think of it as an inevitability as opposed to a worst case scenario, so to speak. Yeah, no, I think that makes
Exactly.
sense, especially when you look at the statistics of the industry, like 99% and close their doors after not too long even. So yeah. The other thing I liked is the data. That was something that helped me when I sold my business was I had all the financial data, but having the service autopilot job costing data was
Mhm.
crazy. I just anonymized the client contact information And then I was able to have a database that I gave to all the prospective buyers of every single job, how much we've charged for it, and how much time it took us to do it for the last few years or something like that. It was big document, but they could basically run the numbers themselves and know they could reverse engineer exactly what we did and how the business worked and all the costs just off of that information to see what they would want to do with it. Do you think that having pre-authorized credit cards is definitely not as good as annual contracts? Does it help much or
I think they go hand in hand.
yeah.
So, again, if I look at one of the best small business that has been offered to us this year, uh, in other words, the best opportunity that I saw was a company that had a 25-year run in our market. They had a brand, they branded vehicles, not very many, but they had a few branded vehicles, had a website, they had a client list. They were using QuickBooks to manage all their accounting practices. They did not have a CRM, so they were using spreadsheets like Excel spreadsheets or Google Docs or something like that. And they did not have credit cards on file. So, from my vantage point, I'm going to have to take all their data and input it into Service Autopilot, which is what we operate off of. Not a big deal. It's just going to take some time. But I'm going to have to convince all their clients. They had about 500 clients. We have to convince our clients to give me a credit card when they've been used to paying after the fact, a check or with cash or Venmo or however they were collecting money a lot of different ways. Uh, Credit cards on file is an industry best practice at this point. And if you're not doing that already, you need to be working aggressively to get that for all kinds of reasons. It improves your cash flow. It reduces the business's risk. It simplifies the transaction. It actually makes the client's life easier and better. And if you're ever interested in selling the company, you've conditioned those clients to understand that that's going to be a requirement. So there's almost nothing negative about it. It's all positive. And again, if I
People
look
look at
at the
that
landscaping
cost.
company,
A lot of people look at the
yeah,
cost, but really it's not a cost. It's an investment. Yeah.
well, it is both. In terms of credit card processing fees, if that's the cost you're talking about, we spend over $100,000 a year on credit card processing fees. All of that is built into our pricing. So the example that I would use with someone would be, if somebody comes to us for a landscaping project, and this just happened to us last week, where it's a $25,000 project. It's not a very big project, but it's a good sized project. And they were looking, we need to shave a little bit of cost off this. What can we do? And a lot of times clients will say, what if I paid you in cash? And they're really thinking that you're going to not pay taxes on that. So we'll save the 8.25% sales tax, in this case, in the state of Texas. Um, well, okay, well, we're a legitimate company. We're always going to pay taxes. We're not going to go down, we're not interested in handling cash necessarily if we don't have to. But what we can do is we can offer you a 3% discount off the total because we're not going to incur a credit card processing fee. We've got that built into our pricing. It's just part of our standard overhead expense and overhead recovery that's built into all of our estimates. So my recommendation would be take credit cards, but don't take that money out of your pocket. Increase your pricing by 3 or 4 or 5%. The other thing that's becoming, and this is something that we're just really delving into ourselves now, but the other thing that's really becoming more prevalent, excuse me, is in our industry is the use of financing. So we now offer financing, not for recurring services, but for project work. And there's a lot of our clients that have never even thought about that. And, it's a 25, 10, 20, 25, $30,000 job. You can easily build in the cost that our business in this case, will incur by offering financing, because we have to pay down some of that financing, the cost of acquiring the financing, if you will. Um, you build that into your pricing. And then if the client says, no, I'm not interested, I'm going to use a credit card. Well, you know what? I'm able to offer you another 3 or 4% discount because we're not going to, you don't have to tell them it's because of financing. you could come up with another reason why you're going to give that discount. Maybe it could just be the May discount. You know, we're running a May special and it's 4% off of all projects over a certain dollar amount. Um, but if you build those costs into your pricing structure, you have a lot of flexibility to negotiate if the client's able to pay you in a different way.
Yeah, no, that's a great idea. I like that a lot. Yeah, for me, when I started doing credit cards, the 3% was equal to less than the amount of money I was losing by forgetting to bill people or stuff. So
Mm.
it paid for itself instantly. It was totally easy. Do you think that kind of stepping back a little, when you you said that you one of your first jobs was mowing lawns, do you think it's a coincidence that it kind of came back to that, or or not?
I don't know. My generation, most of my friends probably mowed a couple of yards to make a little bit extra money. Back in when I was a kid, if you wanted to earn money, if you needed to earn money, I mean, a lot of people, needed a little bit of extra money for whatever reason. You either mowed lawns, you threw, you had a paper route, things that don't really necessarily exist too much anymore. The mowing lawn still exists, but we washed cars, and so I don't know that it was a coincidence. It was just my generation. And I grew up, wanting to be an entrepreneur. I now realize that, but I started little businesses. I did a handyman service for a while in my late teens, and I realized that I was probably never going to make a lot of money because I was underfunded. I didn't know what I was doing. But no, I don't know if it was a coincidence. I think you either have people that start off and they're working at a young age or they're not. If I look at my three sons, two of which work in our company, they did not work much when they were teenagers because they were in sports. And we wanted them to focus on school and sports. So they didn't have the same upbringing that I necessarily did. I didn't have to work. I just wanted to work. And my dad owned a lawnmower. And so I started off, having him pay me a couple bucks to mow the yard and allowing me to use a lawnmower. And I just went door to door up and down our street. And, as a 10 or 11-year-old kid, it's hard work. But people will pay you. Back in those days, it might have been 10 bucks. It's like, that's a lot of money. You could do a lot with $10 when you're a kid. But I do know, and having met a lot of landscape and lawn care company owners, a lot of them started up, they started their companies as they were the person on the truck. They were the owner operator. And the ones that have been successful uh, found a way, grit, determination, sometimes luck, a lot of effort. Um, they found a way to get the second truck going and then get out of the truck and then start building a business instead of just a job. The majority of the, I think, again, my opinion, but the majority of the companies in our industry are really owner operators, and it's really a job for them. And it can be so much more than just a job.
Yeah, absolutely. Yeah. No, I want to come back to that point too. But then I'm kind of curious. So you're working with an agency to help you buy a business. You can choose any business in Texas. I'm guessing you wanted it to be local, probably not online. Um, but was it serendipitous that that it was lawn care in the end, or is there a particular was it a personal decision because you like the industry, or was it a business decision because it made more sense that way? Did it relate back to your early experience at all? How did it come to be?
Now, really, we went out and we marketed myself to about 1,000 companies, which sounds like a lot, but in the Dallas Fort Worth market, it's not a lot. It was actually companies of a certain size in 2 counties where I wanted to live within the area that I wanted to, commute. We looked at garage door companies. We looked at gutter companies. We looked at a roofing company. We looked at multiple different sign companies and probably 5 or 6 landscaping companies. And we actually made offers on 3 other businesses before we found the company we bought, Grass Person. And the other businesses were not landscaping companies. There was a sign company, there was a painting company. The the second largest residential painting company in the DFW market. So anyway, I think it was sort of by chance. When Grass Person came along and I really started looking at it, and after I met the founder of the company, I felt that he and I really connected. I believed in what he had created. He's very process oriented individual. I like process a lot. I'm more engineering oriented, more numbers oriented. That's how he saw things. He had built a great brand. His vehicles were all branded. His employees were all in uniform. He had a CRM system, and these are all things, speaking to somebody who's come from a global company that's all about being organized and branding and process driven and all that sort of thing. It's like, okay, this just really resonates with me. And also, I believed, one thing that I didn't say though that we were looking for, we were looking for a platform, even though I wasn't really uh, you know, aware that I thought that would be very important. I knew that it was something that would be a nice to have. So what is a platform business? A platform business is something that's doing multiple services, and you can either continue to offer all these services, or you can delve into one or more very deeply and ultimately say, maybe we're going to grow lawn care faster than we'll grow maintenance because, and by the way, this is what we're doing because maintenance is really hard to make money or much profit off of pure maintenance, but you can do really well on lawn care. You can do really well with irrigation repair. You could do really well with Christmas lights, which we were in that business. And we decided, you know what, we want to be in the holiday lighting business, but we also want to be in the landscape lighting business. Let's go find a business that does all that. And so now the trajectory that we're on is we'll continue to provide and offer maintenance, but it's not we're not promoting that. If you look at our website, it's hard for you to find things about lawn maintenance on our offering. Whereas with lawn care, fertilization, weed control, top dressing, aeration, all that, we have all kinds of content we've created around that. We do all sorts of advertising for that, really focused on that. We're trying to drive all of our reviews in that area to where people, when they look at us from the outside, they're like, oh, this looks like a lawn care company. And that's the business. That's one of the businesses we want to grow. But no, I think it was by chance that we found the landscaping company. It was more around the brand, the owner, how he had the business set up, and what I believed we could do with it ultimately.
Right. No, I that's really neat, that idea of the platform. That's really cool. I work with clients all the time, as you know, to help kind of retarget the services that they're offering to, not to confuse with retargeting, but like to re-point their business in the direction of a
Yep.
service that they prefer to be doing. That's interesting because a lot of the other businesses you mentioned, I mean, you can lean between residential and commercial, but it's still painting. I don't know. I don't know much about painting, but I see what
Right.
you're saying. It's less, there's less options there. That's really fascinating. Huh. So in your experience of having purchased it and then building the business from there, uh, is there anything that you would have done differently buying it? I mean, no regrets, of course, but is there anything that maybe you would do differently if you did it again? And then how has the experience of building the business since you acquired it, how has that been? And is there anything that you would do differently there?
I don't think I would have done anything differently on the acquisition side. I felt that it was a win-win agreement for both parties. Um, I went into it understanding all the cost drivers, and I had a really good team put together on my side to put the deal together to navigate through all the nuances and all the intricacies that you really should look at when you're buying. If you're buying a really small business, okay, that it's probably less risk that you're going to potentially encounter. Whereas when you're buying a bigger company, you want to make sure that you've dotted all the i's and crossed all the t's. Simple things that a lot of people don't think about. I'll give some examples. Is intellectual property. A lot of times when small companies are sold and bought, there's not a lot of mention around the intellectual property. So what does that mean? the rights to the name, the rights to the likeness of the brand, the rights to the any materials that have been created, website, things of that nature. Um, and so I thought we did a really, really good job of covering all those bases. It cost more to take the approach we did, but the risk was really minimal in the end. The second part of your question is what I do think differently in growing it. And the answer is yes. Hindsight is, 2020, so to speak. I mean, it's always easy to look in the rearview mirror and say, could have, should have, would have done these things a little differently. Um, the way I like to look at it is that the mistakes we've made have been investments in our future. Um, because I didn't come from a world where I had created businesses and learned some of the, things to do and not to do along the way, I had to learn some of those things. And that was probably the second most important reason for me wanting to get into business for myself. I'm a lifetime learner. I know that. That's what I'm driven by. Money's great, but that's not that important to me. What's more important to me is that I'm learning, I'm developing, I'm growing, and being in business is one of the best ways to do all those things. We were lucky in that we had a cash flowing, profitable company we bought, and so you can make a couple of mistakes along the way, and they're not catastrophic. So there are some things we'd have done a little differently. One of which is that I would have understood the real profit drivers of our industry much earlier. I would have been more focused on that. I wasn't focused at all on it. To where I would have been investing more in growing lawn care much earlier than I did. It probably took a couple of years before I finally realized, you know what, we need to be spending more effort on lawn care than we are on picking up more full service contracts. Full service contracts look good because they're more dollars, um, but ultimately they're not as profitable as picking up smaller lawn care clients that are recurring revenue clients that are maybe going to be with you for 4 or 5 years, maybe even longer if you do a really good job, and they don't sell their house, but they're much more profitable. So from a net profit standpoint, I would have been more focused on that early on. And I think a lot of people in our industry don't necessarily they're not aware of that. And I'll give you a couple of examples. There's some companies in our area, they're really focused on lawn maintenance. I always ask them every time I meet with or talk with those other owners, why aren't you offering other services? Like, well, what we really know is we really know the lawn maintenance part of it. And you can't necessarily convince them if they don't want to be convinced that there are more profitable things in our industry. And, ultimately, if they're doing well and they're satisfied, then that's great. But there are high profit or high profit margin services in our industry, and then there are lower profit margin service in our industry. And if I would have really understood that, and if I really been or focused on that early on, I think our progression would have taken place much faster than it has now.
No, that makes a lot of sense. I see that a lot too. Yeah. Well, I'll never forget when I had when I was a long time ago, I was mowing lawns, and there was this one lawn where I overlapped with another company's route, and so we were always parked across the street from each other. And this other company had, I think, like this massive truck. They might have had 2 vehicles even show up, like huge rig. I don't know how probably custom built with with the big cab on the front and
Yeah.
all the equipment and dump beds and everything on the back. I think there might have been like 7 or 8 people on the crew just for one property showing up. And Lindsay was the guy running it, and he would always chat with me. And one day we were talking about how many properties we were hitting that day. And I think I was mowing about 20 lawns that day by myself. And he said, "How many properties do you think we're doing?" And I was like, "Well, I don't know. You got 10 people. You're probably doing a lot more than me, right?" Nah, they were doing like 3 or 4 or something like that. And they were charging like
Mm.
hundreds and hundreds of dollars a week per stop versus my $20 a stop. And not quite the same thing as what you're saying in terms of the margins, but like just that whole perspective of like, oh, there's other ways of skinning this cat, you know,
There
this is
are.
still landscape maintenance, but like these, I mean, their gear, you have to see it to understand. They must have had decent profits because all their stuff was brand new. All their uniforms were perfectly clean. Everybody was happy. Nobody was in a rush. You know, they just kind of do their thing and meander around, and they're just raking in money as far as it seemed. So yeah, that was a big eye opener for me of like, oh, okay, maybe I got to think about other ways of doing this. I don't think it was too long after that actually that we did some really serious price increases. And actually, even understanding the price elasticity within some of the services was so eye-opening for me. I think a lot of our industry kind of copies each other, and I think a lot of our industry is maybe about it's impossible to know, but like 20 years behind sort of thing. So they're sort of pricing from 20 years ago, and they're copying each other on pricing from 20 years ago. And
Right.
so yeah, we did an exercise where we looked at what can we do to increase profits, to increase the price without increasing costs. And so we came up with this big list and we surveyed a bunch of our favorite clients. And that was a really big shift in the way I started to think about marketing and all that stuff. And that was a big part of my journey was realizing like actually a big thing was realizing that I mean, if with a really big business and thousands of clients, you have a pretty good idea for the market, but I wasn't in that situation. And what I realized was that I thought I knew the market, but I only knew the market that I was attracting. And so I'm thinking people are only willing to pay this much. How do I know? Because everybody I talk to on the phone, that's all they're willing to pay. When we changed our messaging and we did it through data analysis and reverse engineering what our most profitable clients were interested in, and we changed our messaging, it was like all the doctors and lawyers started coming out of the woodwork, all these people that we didn't even know existed in our industry. And I really realized that you don't like unless you're doing real market research, if you just think you know the market based on who's calling you up, all you know is the market that you're attracting. And so there could be this whole other hidden market out there that you're just not speaking to. And so if you don't know that, that like, wow, for me, it was pretty much the difference of doubling our prices and being a viable business or not. And so that was one of the biggest lessons I learned. It was really neat. Yeah, I'm seeing our time is winding down here, and I really appreciate your time. So I'll be respectful of it. If is are there any last points that you'd like to leave to end this conversation on? Anything that you think would be helpful for anybody kind of following your footsteps or watching this?
You know, um, well, one thing I would say is that technology, I underestimated the amount of technology that was involved in our landscaping company before we bought it and how much more technology we've implemented over time. And when you think about everything that's happening today with, AI and chat GPT, we've gone from a year ago, you didn't really hear too much about all this, or if you did, seemed like it was, you know, outworldly or something. It was on another planet someplace. And now it's everywhere you turn. What causes me to realize is that technology can play a very significant role in the development and the growth of any business. Understanding data. So data is very, very important, which is one of the things that brought you and I together. Um, and and then being good at capturing and then tracking and being able to analyze the data that you inevitably generate within your own business is very important, whether it's um, the profitability of the client based on the amount of labor that you're applying to a particular job, i.e., you're doing 20 jobs yourself and the other crew has 3 or 4 men on it. You're doing about the same amount of square footage. Data will get you very quickly to understand what kind of problem you have and how to solve it. Whether it's the data integrity or understanding the data and making sure there is a level of integrity to it, but understand the data relative to pricing and to costing and all those sorts of things. Technology is everywhere around us. And, I started hearing the term tech stack or technology stack, I don't know, 3, 4, or 5 years ago. I think it's probably been around for a long time. I just didn't live in that world too much. And now I look at everything we do relative to the tech stack. what tech stack or technology stack do we need to have in order to better serve our client, to understand our cost, to understand the price and the price elasticity of the market, to understand how to market the services we have to the correct client profile or client persona. Um, so the way I would look at things is, if I was going to leave people with one thought is, my assumption is that people are already working hard. They already have a lot of initiative. They're already, focused on their business. But a lot of times they not really understand the technology that's available. And it doesn't all have to be very expensive. There's a lot of technology out there that's really low cost at this point. And I would encourage people to listen to podcasts like yours and others to try to understand how other companies in our industry are using technology to their benefit, and then work smarter. Not always, and the old adage of try to work smarter, not harder, is there, and a lot of times technology can be your friend if you allow it to be.
Excellent. Well, thank you very much for speaking with me today. I really appreciate it.
You're welcome. Thank you.